Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. And sometimes you may question my ability, and that is, in most cases, a valid response, a valid thought. Anyway, let's go back 6 days ago to a really good comment from a trader hooper who mentions something about your comments, saying the quality of comments on this channel are really good. I just wish the replies to these comments would be really good as well. Anyway, it makes for a great Saturday video. Thanks for taking the time to respond. And then Vorosil mentions maybe we should name this channel to Hot Knepper, in relation to Hot Copper. Funny enough, as soon as I saw that Hot Knepper, there's actually an actor, Robert Knepper. Yeah, so Knepper is actually a valid last name, and I'm pretty sure he was on Prison Break. Here it is. I'm pretty sure he was on Prison Break. Yeah, Prison Break and a few other movies as well. So he's not well known, but I did see Prison Break just because my ex-partner loved that show. And the thing that stood out to me was this guy's last name, Knepper. So a lot of variations of my name, including Knepper, Neep with an I, Nap with an A instead of the E, that sort of thing. Anyway, so I'm going a bit of a tangent here. Anyway, so thank you for all your quality comments, questions, that sort of thing in this particular channel. It gets, in fact, I do learn a fair bit. I have learned a fair bit from your questions and or comments. So thank you very much. And it seems like Trader Hooper is one of many who appreciates your, we'll say, all your intelligence. You're very intelligent, insightful, intelligent, all those things. I just wish I would be the same. APAP says, what do you think about ATV and WBT? This is Activeport and Weebot Nano. Okay, Weebot Nano is more of a story stock, and the market loves the story behind Weebot Nano. Activeport, if I remember correctly, this company did release something recently. If I remember correctly, I could be completely wrong. If I remember correctly, I'm just logging into, what's it called? ComSec. And what was it again? Oh, that's right. They unveiled the first Australian private cloud superhighway. Really interesting title. And I have forgotten about that until I saw this particular comment. So this was released on the 14th, so just about 9 days ago. So it just shows you it doesn't take much time for me to forget about what I thought was a really interesting announcement. Now, this was on the 14th, and since then, the share price on that day rose 130%, and then I forgot about it. And the next day, share price rose 13%, then down 50%. You can just see the volatility in the share price since then, and the share price is now lower than what it was or where it ended up on that particular day. Now, the share price is double since then. Well, not since then, but the day before anyway. A massive amount of shares traded on that day. In fact, if you have a look at the chart for Activeport, a lot of shares. Now, this company, in fact, the chart doesn't look half bad. I don't mind this chart. I don't mind this chart at all because the share price popped up and you can just see the share price going sideways, even though it's a little bit lower than it was at the end of that particular day. But I do like these sort of setups where you see that massive pop and also probably really good volume coming in, and volume has remained. So you could argue maybe there's a bit of day trading going on here, but I don't mind these sort of setups. The only issue I might have is just how, because Activeport is still, now they do generate a little bit of receipts and revenue. And if you go back to, although they also release a presentation on the 20th. So I might have a look at this presentation if I don't forget. They did a couple raising not that long ago, but if you have a look at their most recent Appendix 4C, they do generate a little bit of receipts and revenue. So it's not truly a story stock because this company is selling something. So there is someone out there willing to buy this company's products or services. That makes this company, in a way, a real company, but they haven't quite hit that inflection point just yet in becoming cash flow positive and profitable, which is a really important step because that way you can fund your own growth. At this point in time, they can't fund their own growth. If they want to continue growing and be cash flow negative, they'll have to go back to the market for a capital raising, although they just did that. So the question becomes, how beneficial will this private cloud superhighway be in the long term for Activeport? I don't know. So still a lot of speculation when it comes to this company. But the chart doesn't look half bad. I don't mind this chart. Now, when it comes to Weebit Nano, a little bit different. Now, by the way, before I forget, and I'm glad I remembered, Activeport is still fairly small, market cap of 14.43 million. So I'm actually, in a way, a little bit more willing to take a flyer on this sort of company with a market cap so low. But I do prefer some financial news, or I do prefer if the company is very close to that inflection point. Activeport is just not there right now. But Weebit Nano is a little bit different because there is a lot of, I wouldn't say hype, but there is a lot of interest in this company. Market cap of $615 million for a company that has not generated any receipts or revenue, or very little receipts. I think they've just started selling something, if I remember correctly. So let's go back to the pennies 4C, and I'm pretty sure they were not selling anything until just recently. And in the most recent quarter, $1.4 million receipts, $4.6 million for the year to date, and still burning through a fair bit of cash. So they're still a long way from being operating cash flow positive or free cash flow positive. But the thing is, there is potential. Maybe the receipts could climb at a pretty significant rate. And that is probably the expectations for the market, that this company is going to see a fairly rapid increase in receipts or revenue. But when that's going to happen, I just don't know. It could be now. There could be at that point right now. They have a lot of cash on hand. I'm just reading that now, $88 million of cash on hand. But when that's going to happen, because don't forget, Brain Chip, 2020, a lot of hype in that company, a lot of interest in that company, and 5 years later, that company has still yet to create any meaningful revenue or receipts. So it's taken 5 years, and might take another 5 years. So that's why I would still consider Weebit Nano a story stock. And just a valuation, $600–700 million market means there's a lot of potential already priced into Weebit Nano. Now, this company could be significantly bigger in the future, but there's also that downside risk. So it's all about your risk appetite when it comes to these sort of companies. I don't understand the tech. That's the other thing I should mention. Now, if you really dug deeply into their tech, why their tech is better than anything else out there, that's a different story. If you really dug deeply, did your research on this company, but I haven't done that yet, so I just don't know. And for me, I'm not willing to go that far just simply because there's a lot of variables happening here, and I'm not an expert in this space. Not an expert in this space. So they are into semiconductor memory technology, and I can definitely tell you, I am no expert when it comes to groundbreaking resistive RAM, ReRAM, non-volatile memory, NVM. I have no idea what that means. Anyway, let's have a look at the chart for Weebit Nano, and you'll see the volatility in the chart of this company. And for me, this is more of a trading stock, if anything else. Now, the chart is starting to look pretty good. I don't mind this chart either. Share price ran up fairly nicely on pretty good volume towards the end of last week into the start of this week. In fact, the share price rose above 14% in consecutive days. Not sure what has led to that. In fact, they did receive a price query from the ASX, probably asking the same questions. We could actually have a read of what they said. Oh, in fact, in the answer to question 3, an article on the Motley Fool website, stated on the website to be published on the 15th of August, referred to a reputable broker placing a buy recommendation of Weebit Nano shares and including a price target. There you go. Just a broker. That's it. The article was removed from the Motley Fool website on the 18th of August. To Weebit's knowledge, the article was false. Okay, that's actually a little bit more interesting. Anyway, so if we go back to the chart, you just see how much volatility there is in this company, because it's really hard to put a valuation on this sort of company. It's still a story stock. You could ask 10, 20, 50 different people to put a valuation on this company, and it could range from 10, 20, $50 billion to zero. It's really hard. It's much harder to put a valuation on this sort of company than, say, Woolworths. Very easy, in fact, Woolworths. Or maybe not very easy, but so Weebit Nano share price has reached a high of $9 in 2023 and a low of not $150. So you could see an decrease of share price of 80, 90% in a fairly short period of time on nothing but just a shift in sentiment. Anyway, so those are my thoughts on those two companies. Now, Activeport, I think, is a little bit more interesting just because of valuation, and at least they are selling. Well, I suppose Weebit Nano is selling something, but my only problem with Weebit Nano is just a valuation, probably. Anyway, so thank you for that, APAP 4997. And my suggestion would be just to do more research, particularly if you want to buy into it for the long term. Okay, let's go. Oh, Serentivu says, Kneppy, what are your favorite top 5 romantic movies of all time? And 5 thumbs up. Now, this is why I included this particular question in this video, because it was 5 thumbs up, which means there was a bit of appetite for me to answer top 5 romantic movies of all time. And I'll be honest with you, I can't give an answer right now. I'm going to do a standalone video on this. This is a sort of a question I have to think a little bit more about, because romantic movies are not my thing. In fact, my second least favorite type of movie genre is rom-coms. I hate rom-coms, but I do like rom-coms a little bit more than musicals. In fact, yes, I don't like musicals at all. There was that movie, La La Land. I had no idea La La Land was a musical. I put it on, and I turned it off within a few minutes, because I don't know if you've ever seen La La Land, but at the start of that movie, I think it's set in Los Angeles, must be set in Los Angeles because traffic, that sort of thing. And there was a traffic jam on a freeway. Everyone got out of the cars and started singing on top of their roofs of the cars, and I turned it off. For me, it's nonsensical. I had a really interesting debate with someone quite a few years ago, and this person said they don't like fantasy movies, but they love rom-coms. And I said, you do? Well, actually, not rom-coms. They loved musicals. And I said to him, the musical is the ultimate fantasy, because nowhere in real life do you just see people just randomly, starting to sing in real life. It's a fantasy. So you can't say I hate fantasies but then love musicals, because musicals are a fantasy. And in fact, I would say there's more real life in fantasy than there is in musicals. Anyway, and funnily enough, I didn't mind going to theaters to watch musicals. I don't know why. Like, I've seen Phantom of the Opera, Les Mis, a few other musicals as well, and I didn't mind those experiences, just because I think, I don't know, there's something about being there in a theater that makes it a little bit different. But what I will do, because I can't give you my answer right now, because I don't have any. All my favorite movies of all time are not romantics. There is not one romantic movie there at all. But I will have a look at this. I have to delve a little bit deeper, because I'm pretty sure I have watched some romantic movies in the past that I might have liked a little bit. But anyway, this might be a nice little standalone video, so I'll do that if I remember. I should write it down, because I will forget. Anyway, I'll write it down when I actually do, not the editing, but when I do the, what do you call it? Because I don't edit these movies or these videos. I just start recording, finish recording, and there's no break in between. But what I do is the timestamps, and I'll remember to write it down, that I should do a standalone on that particular question. Simon Kung Fu. I wonder if Simon Kung Fu loves Kung Fu. Howdy, Kneppy. Knowing that you purchased Novonix shares recently, I really like to see a video on your analysis of the company as a trade and as an investment. Where do you see the share price going from the short to long term? Cheers. So this is an interesting one, Novonix, because I bought, because I just noticed this was just a weird. By the way, if you have a look at the weekly chart for this one, or just the daily chart, long-term downtrend. So straight away, either without knowing anything about this company, if you didn't know, you'd say either this company is really struggling financially, or this is a story stock. In fact, the share price of this company was $12 back in late 2021. Now it's below $1. So straight away, there you can see this Matterhorn pattern, which is something I've called these sort of patterns. So you can see the share price going up and then dropping all the way back down. And usually when you see these sort of patterns, either there's a bubble and it's burst, or it's a story stock, and you just see the massive shift in sentiment. And Novonix is more of a story stock than anything. And again, this is another company where I don't really understand the technology, because I haven't really delved deeply into them. All I do is look at their most recent, share price up 10%. Go, because I am trading it. So very happy with that. So I just have a look, like they just released the half year, and I did not have a look at that half year report in Appendix 4D, because I knew that, well, for these type of companies, I don't look at the half year, full year reports. I look at their Appendix 4Cs or 5Bs, and they released that. Where's July here? Oh, they do release a lot of stuff. So they released their Appendix 4C on the 24th of July, and we'll have a look at that now. So they do generate a little bit of receipts. not a lot, a little bit of receipts, and they've been generating a little bit of receipts for 4 to 5 years, maybe even longer than that. So I need to see a little bit of action when it comes to receipts. So $1.3 million in receipts in the last quarter, $2.8 million for the 6 months, highly operating cash flow and free cash flow negative. So for me, there is no way I would buy this company for the long term because I just don't know. I just don't know the technology. Something to do with lithium. So you can see, I just don't know anything about it. Leading battery technology company, revolutionizing the global lithium-ion battery industry with innovative, sustainable technologies, etc., etc. So this is another company where I think delving deeply into what the company does, their technology, would definitely benefit if you want to or are thinking about owning this company for the long term. Now, when it comes to trading, I don't really care about that sort of thing. When it comes to trading, that's irrelevant for me. That sort of thing. So this company could be significantly bigger in 5 years. It could be significantly smaller. And we have seen the share price drop significantly over the last 5 years. Now, let's have a look at the markup. So 350 million. So it could drop literally 90% from here, even though it's dropped almost 90% in the last 4 years, because, again, it's a story stock. And I just don't know which way the share price is going to move over the next 5 years. And that's why I do prefer to trade these sort of setups. So because I mentioned that, why did I trade it? Now, the first reason is the share price really popped up in July. Wasn't there a little bit of enthusiasm in lithium? And I suppose Novonix is lumped up with other lithium companies, and the share price pulled back a fair bit. And all I saw, I looked at this and I went, I think this little pullback has come to an end. There was a couple of days when the share price sort of, it stopped dropping, and really low volume on these days compared to what we saw on the rally. And also, I was thinking, I think the long-term downtrend might be coming to an end, but that could be a mistake. So not as much confidence in this particular setup and trade as I would have in others. And you can just see the volatility since then. Like the share price has gone up 14.6% one day, dropped 5%, 4%, 2%. And then the last 2 trading days, it's gone up 10% and 10.1%. And the reason you see that volatility is because it's a story stock. And again, it's really hard to value this sort of company. It's really hard. And sentiment is the main driving force of share prices of these companies. So a little bit of positive sentiment in this company over the last 2 days. I don't know why. There may be a reason. And look at the volume as well. Some really good volume coming in. And that is another key for me, that really good volume. Now, I would have preferred that the share price didn't run up all the way up to like 63 cents, because there would be a little bit of resistance. But this does show signs of a potential breakout, just a potential breakout. Anyway, so for me, where do you see the share price going from the short to the long term? Yeah, long term, no idea at all. And when I say long term, I'm talking about 5 to 10 years. That for me is long term. If I own a company for the long term, I'm talking about 5 to 10 years, hopefully even longer than that. I have no idea with Novonix. If you asked me this question 5 years ago, we'll say 4 years ago. Actually, no, 5 years ago. So August 2020, share price was $1.22. And I mean, the share price is now lower, but in the meantime, the share price actually was a 10-bagger. It went up tenfold. And it's gone back 95, well, maybe not 95-fold, but 95%. So this is a problem with story stocks, is it's up in the air. In the short term, I think there is potential upside, and that upside could last a few years. It could last 5 years. But I think the main thing for these sort of companies is you want to eventually see some financial growth, some revenue growth, receipts growth. That is eventually what I want to see. And if that does happen for Novonix, you might see the share price taking off. So thank you for that, Simon Kung Fu. I am Eka. I am Kneppy. I have only one strategy so far, focusing on fundamentals when investing. I've been following your Want to Learn series and your videos regularly to enhance my knowledge. I've noticed you often use technical analysis for short to medium term trades, and I'm really keen on learning more about this and this to my strategies. Have you created any separate videos on technical analysis, or what would you recommend to learn these? No, I have not. I've not done any videos on technical analysis, and I'm thinking I might change that when I get back from overseas, because I'm still learning. I am still learning when it comes to technical analysis, continually learning. Even when it comes to fundamental analysis, I am continually to learn. And I am thinking I'm going to do more videos on technical analysis, because I'll be honest with you, I actually do enjoy technical analysis. I do enjoy looking at charts and that sort of thing. Do I prefer it over fundamentals? In a way, yes. In a way, I do. And the main reason behind that, when it comes to fundamental analysis, when it comes to high quality companies, sometimes you don't know you're going to be wrong for quite a while. So I've been bullish on CSL for the longest time, and there is potential that that CSL is now struggling. And I could be wrong, could be right, just don't know. But when it comes to technical analysis, you know you're going to be wrong fairly quickly. And that's a really good thing, because when you realize you're wrong, you just get out. And that is my rule. Get out, get out. It could be wrong. Now, you could overreact a little bit, but that's fine. So that's one of the reasons I do like technical analysis, because you know quite quickly that you are wrong, and then you can fix whatever decision you made fairly quickly. Anyway, so I have not done any videos on technical analysis, and I think the main reason behind that is I have been definitely more comfortable with fundamental analysis, and I probably think that I'd be more of a fraud if I did a technical analysis video, just because I'm still in that really learning phase. But I still realize that I learn more about technical analysis than most people. But sometimes I will get comments here who talk about, for instance, I've still got it here, mastering the volatility contraction pattern. I've never heard of this before. And so this is a technical analysis thing. And I've still yet to learn about this. But, Trade Align. I've also discovered Trade Align website. They have courses, this sort of thing. You can even see Stan Weinstein is an instructor. And this was actually a recommendation from a viewer of this channel who just sent me a message saying, hey, Trade Align, look at this. And I didn't even realize this particular page was from Trade Align. So I really want to learn about this sort of thing. I want to dig myself, or, just put my teeth into technical analysis a little bit more. And if I do go down this path, and I will go down this path, I might do more videos on technical analysis. And I might start from really simple concepts, just like, why do I use candlesticks? Why do I use candlesticks? Why do I use moving averages? Why for like weekly moving averages, or I use 2500, 200 typically. Why do I use those? Why do I go from daily, weekly? I even look at monthly on occasion. What else? Yeah, maybe start simple and then work my way up. And the other thing is, and I used to teach in university. I was not a professor. I don't have a PhD, but I still taught in the university. And what I found teaching in university, and I think this is fairly common knowledge, that when you do teach, you learn a fair bit, because you have to know a lot of stuff when you start to teach. So if I do these videos on technical analysis, it just means it sort of reinforces things I've learned. And that's the other really important thing. When I taught at university, it really reinforced stuff that I've already learned. And sometimes when it came to meteorology, some of the concepts you have to see quite a few times. So forecasting weather is actually not that simple. Like the theory behind it, it's actually really difficult. So we're talking about needing to know, for instance, I almost have a minor in mathematics. In fact, I probably would have a minor in mathematics. And you have to learn partial differential equations, that sort of thing. So you learn a lot of mathematics. And sometimes because you keep learning a concept over and over, looking at a concept over and over, and eventually it sinks in. And it's not understanding the mathematics, it's understanding the processes of why something happens, if that makes sense. Anyway, I don't want to bore you with other stuff. But anyway, so I'm definitely thinking about doing more technical analysis videos. So thank you for that. I am Car. Oh, I've answered that in person. I've answered that in person. Some people were saying I was looking at the 200. I was meaning the 200-day moving average instead of the 200-week moving average, but I was definitely focusing on the 200-week moving average. And Terry Casson actually said yes, he was mistaken. Okay, 9 slide guide says, well done, holding Fiducian. I just want to give myself a bit of a, a bit of a, what's the word? Make myself feel good. Well done holding Fiducian over the years. Wonderful company. Maybe it's not so expensive, bearing in mind they have $1 per share of cash on the balance sheet, and profit loss includes $2 and 2.4 million of acquired tangibles. The cash flow statement is the most relevant of the financial statements, and in this regard, the company truly is a cash generating machine. Now, because of this comment, I am now thinking of doing a standalone video on Fiducian. I am not sure if I've done many standalone videos on Fiducian, maybe one. There it is, yeah, one. Oh, no, actually I've done quite a few. Fiducian, buy, hold, sell, Fiducian September quarter, and financial year 22 results. So maybe it's true for me to do another video on Fiducian. And one of the things I like about Fiducian is they release a pennies 4Cs twice a year, not 4 times a year. They're not required to do it, but they do it anyway. It's the only company now on the ASX that does that. We used to have 2 companies that did it, Fiducian and Knepper. Knepper said, no, we don't want to do that anymore. So Fiducian is the only company that releases a pennies 4C when they're not required to, and they don't really have to. So I'm going to do a standalone video on Fiducian. So thank you, United Slide Guide, for giving me the motivation or providing the catalyst for me to do that video. And I'm going to do that video within the next week because I don't have much time left. Also want to do a video on CSL, a standalone video on CSL. 2 reasons behind this. Fishbowl mentioned there is a chance it can touch 230. Well, it's gone well below 230 now. Think it's a good buying opportunity or wait for the uncertainties to settle down. And Fishbowl moved his money into RPM Global. No complaints about that. I'm a fan of that company. And he's also mentioned that a lot of these mining engineering companies are doing fairly well. Monadelphous, SRG, Parenti, EHL, which is Emeco, I think. I'll be honest with you, I haven't looked at Emeco much, but their results were quite good the other day. And yeah, the share price has popped up. Yeah, on the 20th. So I thought those results were pretty good. But anyway, back to this. Anyway, so there was this comment about CSL. And by the way, share price of CSL is now 210. Is it 216.60? Has dropped as low as 28.35. So we do see a little bit of volatility with CSL share price right now. And I'll be honest with you, I am at this point not willing to buy in and buy more. I do have a holding in CSL, but this particular comment from VB Ed, when a company announces that they are responding to big challenges by cutting jobs and have to spend $770 million to restructure and demerge the influenza and vaccine division just to better manage the operations, they can no longer be classified as a growth company. They aren't pursuing growth anymore. What do they offer now? Just a meager dividend yield. What is the value of CSL now without the influenza vaccine division? Some good points there, but I would push back a little bit on cutting 3,000 jobs and spending money. Now, we do actually see growth companies do this a lot. Like the Mag 7 do this a lot. You just see them cutting jobs, becoming more efficient. So the question I do have for CSL is how beneficial will this be in the longer term? And there is also the chance that this is the end of the growth period for CSL. And now they're more of a mature company. But if they're a more mature company, they should actually increase their dividend payout ratio, because their dividend payout ratio is quite low. So I might do a standalone video because of this particular comment from VB Ed and Fishbowl on CSL. So we have standalone videos on Fiducian, CSL, and also romantic movies. So I've got to be busy. Roger, by the way, these will be the last standalone videos I do. I'm up to 89 videos to be released in that 2 months. Someone actually did complain. A few days ago, maybe a week ago, I mentioned this. I've got all these standalone videos to do, and someone wrote some comments saying, waffle, 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 you suck, I've blocked your channel, and I just got rid of the message because adding nothing. Anyway, Roger says, hi Kneppy, when you get a chance, could you have a look over McMahon? Pretty good results. And Smart Parking? Pretty good results. Recent financial reports, please. Both look good. So these are 2 companies who did release good results, and I didn't mention because so many companies are releasing results that are either really good or really bad. And when I say really good or really bad, I'm talking about market reaction, which is what I'm looking at. So I did have a look at McMahon, and so McMahon is another mining services company. I've always thought of McMahon as mining, sort of a drilling coal sort of company. It could be a little bit wrong. Let's have a look. I'll just go briefly through. Now, this is, I'm not comparing to how these results compare to expectations or anything, but all I do sometimes when I have a look at results, I do it really quickly. I just have a look at the numbers. Revenue 2.4 billion, so low margins, by the way. So McMahon has a market cap, I would think $300 million. Oh, 926. I was well off. For some reason, I thought this company was much smaller. There you go. Anyway, so revenue of 2.4 billion, but up 20%. Underlying, well, I'm just looking at underlying EBITDA now and profit. Yeah, if they had a market cap of 300 million, this company is really cheap. Anyway, underlying EBITDA 387, up 10%. EBITDA without depreciation, up 22%. So straight away, this company has a lot of earnings before interest, taxation, depreciation, and amortization. So they have a lot of amortization. No, depreciation, I forget. Anyway, underlying profit without including amortization, 102.4 million. Statutory profit, 73.9 million. I would prefer, I suppose, it's really interesting to have underlying profit without amortization, but statutory net profit after tax, which is the same, but I'd like to see the underlying profit. Anyway, up 39, everything's up. Underlying operating cash flow, $407.4 million. Now, they probably spend a lot of money when it comes to capital expenditure. In fact, we can have a look at that in a second. Free cash flow generation of 140.7 million. You should just see, compare operating cash flow to free cash flow. But still, $140 million of free cash flow for a company with a market cap of almost 1 billion. That's nice. So free cash flow yield is actually quite high. So free cash flow yield, yeah, it's pretty good. Pretty good. I'm not going to give a percentage because I can't do maths in my head really quickly. A little bit of debt, but not significant enough. Increase in dividend, and also financial year 26 guidance. And they're looking for more growth and underlying EBITDA. Yeah, so nice growth in financial year 26 based off the guidance. So I definitely can see why the market likes this. Sometimes what I'll do is I'm just going to see if these results are in Fiscal AI right now. Sometimes Fiscal AI will put results in really quickly, sometimes not. They are in. They are in. Yes, they are in. I will have a very quick look. So this is revenue growth. It looks pretty good. In fact, this is what I'm looking for. But they have really low margins. Yeah, if you have a look at operating margins, it's pretty low margins. We're talking about 5%. Although operating margins have increased a little bit over the last 8 or so years. Definitely not as bad as they were in 2016-17. So a low margin business. So straight away, even if I did include mining services in my high quality screener, this company will not satisfy that because of operating margins. I'm not the biggest fan of low operating margin businesses. What else was I going to look at? Oh, free cash flow yield. Because they do calculate free cash flow yield here. Here it is. Yeah, 18.6%. Oh, yeah, it is, because I'm thinking, yeah, it would be that high, yeah. But this company's free cash flow yield tends to be fairly high anyway. But that is high. That is high. The other thing I want to look at is just how much depreciation they have. Oh, I shouldn't have got rid of that. How much depreciation? We can actually have a look at there. This, where is it? Depreciation amortization has been, yeah, it's fairly high, 221.9 million. And I think the main reason for that would be capital expenditure. We'll have a quick look at the cash flow statement. Where is it? Capital expenditure. And we'll get rid of all the rest. Oh, can't get rid of capital expenditure. So yeah, fair bit of capital expenditure every single year, which is why the depreciation amortization is fairly high. So that's why the operating cash flow is significantly higher than the free cash flow because of capital expenditure, which makes sense for this company that for some reason I'm thinking drilling for, I don't know why I think drilling for coal, but it looks like they do way more than that. Okay, and the other one was smart parking, completely different company. Oh, by the way, before I forget, we've got a chart. Let's have a look at the chart for McMahon. Wow, look at that chart. This is a nice chart. This is a nice chart. So I'm going to go through the rest of my charts in my watch lists, and this one would pop up. Now, the share price has gone up a fair bit. We're talking about, what's that, 13, almost 50% in the last month. So that is a fairly nice run for McMahon. Okay, so let's go to smart parking. And this was another result. So I looked at it, went pretty nice results. But again, I have no... I don't know how these compare to expectations or anything like that. I just looked at the numbers and went, oh, that's pretty good. And sometimes I do this particular process, look at the numbers, think, oh, they look pretty good. And then the share price drops 20%. Sometimes you just don't know. But anyway, revenue up 41%, profit up 47%, and the other one is up 62%. You can't complain about that. Now, maybe they have made some acquisitions and earnings per share has not increased at all. But let's have a look. Or they did make an acquisition. Peak Parking for $56.9 million. I'm not sure if that's affected their results. This acquisition has already delivered immediate earnings per share accretion. So typically when a company acquires another company, they said this acquisition will be accretive to earnings per share. But sometimes it's not. Sometimes it's not. And I'm looking at you, IPH. But in this case, it's saying, yes, it is earnings per share accretive, which is good. Earnings per share grew by 37%. There you go. That was what I was looking at. So it does look like there was a little bit of dilution, but not a lot. So just by looking at these numbers in a little bit more detail than I did the other day, it looks pretty good. It looks pretty good. No complaints. The other thing I'll just do very quickly, we'll go have a look at this. I'm just having a very quick look at whether this company could be considered high quality. Revenue growth at 29.1%, return to equity, return to capital, nice. Operating margins may be the one issue because in the last year they were 10%. So operating margins probably would leave this company out of my high quality screener. I don't think it did satisfy that screener. And I can actually tell you right now. No, I won't. Anyway, P ratio 58.3. But let's have a look at the revenue growth. It's nice. Didn't do much from 2016 to 2021, right? So I would have looked at that and went, nah, but nice growth over the last 5 years. So this company really has maybe pivoted. And sometimes you'll see companies do this. They do nothing for a long period of time, and all of a sudden something happens. They transform, or maybe their products or their services just becomes a little bit more popular. Sometimes you just don't know. But this company has really changed in the last few years, and they have become profitable. Yes, so they were unprofitable before that, and all of a sudden they become profitable. Not massive increase in profit. So it looks like, yeah, the margins have been pulling back. But they could be doing this for growth. I don't know. Anyway, now to the chart for smart parking. On this one, I thought this one might look pretty good. Share price definitely popped up when they released results, but then pulled back a little bit. Okay, so chart's not as good. In fact, the share price has been going sideways for almost a year. But if you have a look at the weekly chart, yeah, the weekly chart looks good. And you can see before 2021, a big month for me. And then all of a sudden, when the financials started to improve, particularly that revenue growth, you can see that reflected in the chart. So financials do matter. And financials sometimes is the main driving force is the main driving force of a shift in sentiment. That's it. Yeah, sometimes, a lot of times, it's financials that shift sentiment. And that is what I'm looking for. Shifts in sentiment. SAF. 99681 says Superloop up big, they're now big, or in the first half hour after results release. Not only that, Superloop share price has, in fact, it fell 10% during the week. But if you have a look at the daily chart, yeah, 3 negative days in a row. Oh, I'm like, ooh. Now, the share price did respond fairly well on that day. Share price got as low as 275. So I'm probably slightly concerned right now, but at this point in time, I'm trading Superloop and I have not got a sell signal just yet. I might increase that to there. If I see the share price dropping below about 260, that might be the end of this trade for Superloop. And that would be sort of sad because I've held this since 80 cents 18 months ago. And it's always sad when you sell out of a long-term trade. But if I get that signal, I'll get out. Okay. VBAD took a position in Step 1 clothing at 50 cents. I've taken a position in Step 1 clothing as well, and I put it into my super. Put in my super, and I think the reason well, maybe not, I think. The reason I put it into my super is just because I think there's value here. And I don't have no idea which way the share price is going to go. I just think there's value at these levels. I think the market is a little bit overreacting. I think what they're doing is more because they've spending a little bit of money, which means their results in financial year 26 are going to be a little bit weaker. And I think what they're doing is they're spending money. That's what they're doing. They're spending money to grow in the future. And I don't mind that sort of thing. So the results for this year were sort of flat, but he did mention, Greg Taylor mentioned, like they have this roadmap, adaptive initiatives, financial impact on these initiatives, which I do think in the long run will be beneficial. But because of these initiatives, there would be, EBITDA expected to be between $10 and $12 million. So this year it was 17.4 million. And some people see that and go, oh my God, that's terrible. But they're thinking very short term, not the long term. So that's one of the reasons I put into my super, just because I think long term this is going to be good, but I'm not sure when the market will react. Maybe this is the bottom. There is a chance that this could be the bottom for Step 1. Anyway, so VBED also mentions, with a view to trading it, I couldn't resist the big discounted price today. What I like about the stock is that it is on online retail only. It isn't one of those clothing companies that is reliant on leasing shops, blah, blah. Yes, I agree with that. And I'll also say I only wear Step 1 underwear right now, and I have not found more comfortable hiking and running underwear as Step 1. I've not found it. When I wear their underwear, I don't have any problems at all. And even when I'm hiking 40 kilometers, even running 30 kilometers, no problems, which is unusual. So that is the main reason I like Step 1. Now, I only buy Step 1 clothing underwear when it's on specials, when you have these really good deals. But I'll be honest with you, I do that for everything. I love sales. I'm not one of these people. I spoke to someone I worked with once, and I just mentioned I only buy stuff at Woolworths and Coles when it's on special. And this person said, "Huh? Why do they just buy stuff when they need it?" Now, of course, milk is never on special. Even bread, I look for nice little deals when it comes to bread. And sometimes when I go into a shop and I see something half price because its expiry date is like tomorrow, I'm going to buy it. Not always, but I have to eat it. But anyway, just acronym says online selling is not all rainbow and sunshine. Platform fees like Papa, yeah. And I wish they get out of USA. USA is sort of like the prize, isn't it, for a lot of companies? If you get into USA, that's the prize. Anyway, 50 cents. And if you did get into a trade, share price has now increased 20% from there. And this response from the market is really good. In fact, the share price got as low as 38 cents. I still remember that because I went for a long run this day, and the share price had already rebounded to 50 cents. So a nice little reaction from the market. Now, in saying that, this chart looks horrendous. So that's another reason why I think this is more of a long-term trade, long-term hold for me, just because I think there's value, and I think the share price in like 5 years will be higher. But yeah, I just wish I was following this. I probably would have bought at 38 cents. But anyway, maybe not. Well, that's a pretty bad thing to say, saying you would have bought at the low. Yeah, I wouldn't have done that. Anyway, value and my super. And typically when I have holdings in my super, I don't follow the chart all that often. For instance, here's my American super holdings. Oh, they're all up. Yes. And my Australian holdings, I don't follow them. In fact, sometimes I'll have a look at the chart after about 2 or 3 weeks, and I go, oh, gee, the chart looks pretty good. Maybe I should be trading this. Anyway, so I have taken position in Step 1 and put into my super. Igor says, I dismissed OVT today without looking at it, why its share price moved. I thought the announcement was a good one. Okay, so I dismissed OVT because they had a really bad trial result, and I thought that's the end of this company. Share price is below 1 cent. That's a big no-no for me. What did they release the other day? Oh, wait there. I'm thinking of a completely different company. I am thinking of a completely different company, Ovanti. That's why I ignored this, because I completely mixed this up with another company. Who was that company who released something really bad? I totally forget now. For some reason, sometimes this happens. I completely mix up two companies. Okay, this is a completely different company. And I noticed that when I saw this particular announcement. Why is this healthcare company partnering with BNPL partnership with Shift for Payments? Okay, let's have a look at this company's appendix 4C. I just want to know, because I still don't follow this company all that closely. Receipts fairly low, operating cash flow, free cash flow negative. Share price below 1 cent, that is a bit of a red flag for me. So execute major BNPL, buy now, pay later partnership with Shift 4 Payments. So let's have a look at this one. I'm sorry, Ovanti. Who is that healthcare company that had a really bad trial result and this going, I thought it was OVT. I am not going to be thinking about this forever now. I could have a look at my notes. No, I'm not going to do it now. In the comments, write which company I'm thinking about. Pretty sure that starts with O as well. Okay. So let's have a look. Entered into a minimum 3-year strategic partnership subject to further renewals of at least 1 year renewal with Shift 4 Payments, NYSE 4, a leading US payment processing commerce solutions provider that is publicly listed on the New York Stock Exchange. Overall, Ovanti shall launch its USA buy now pay later business to Shift 4 network of merchants in the US market. Okay, so this could be very beneficial for the company. At this point in time, I just don't know how beneficial. Now, what about this 4? How big is, what's it called, Shift 4 Payments? So let's have a look. $8 billion market cap company with a fair bit of revenue, $1 billion of revenue per quarter. Nice growth. Yeah, nice growth over the last 5 years in revenue, and they actually are profitable. Now, the question becomes, how beneficial is this going to be Ovanti? Because Ovanti, in terms of size, must be significantly smaller. So let's have a look. 38.47 million. Shares on issue 4.27 billion, which is not surprising based off the share price. So who is this going to benefit more? It may more benefit, well, I don't know. So Shift 4 Payments is probably just thinking, well, what risk is this to us? They probably have no risk at all, but this could be company making for Ovanti. It's got Ovanti up here in the tab, and then Ovanti here. That's interesting. Did they change the name from Ovanti to Ovanti? IOU Pay. This company used to be called IOU Pay. I know that company, yeah. Okay, so this company's gone nowhere over the last 5 years or so. But the question is this the company making an announcement? I'll probably hold off on that just yet. I've seen plenty of these partnerships go nowhere for the small Australian company. And I think the main reason behind that is because the larger company, there's no risk. If it works, great. If it doesn't work, who cares? And I think I come back to a company called OBJ. This would have been 2013-14, who announced a major deal with Procter & Gamble. And everyone was like, oh, wow, pretty big. Went nowhere. And they were selling some sort of, I forget exactly what, some sort of technology where you could roll on your cream on your, I forget. And it just went nowhere. And Procter & Gamble didn't affect Procter & Gamble at all. They didn't become bankrupt, but OBJ went, okay, I think pretty sure they changed the name and then went. So sorry about that, Igor. Yeah, I did dismiss OVT. But again, they released on a day when everyone's releasing announcements or results. Okay. Oh, Retail Food Group. Michael says share consolidation. Yeah, they must have done a share consolidation because the share price was not $300 in 2014. But just acronym also mentioned, I remember driving home from work with finance news on the radio, calling Retail Food Group the best performing stock of the decade. Boy, that bubble popped hard, and I'm showing my age. I still remember 2013, 14, 15. I'm trying to remember when the bubble burst. It was 2017 maybe. And I still remember before the bubble burst, yeah, Retail Food Group was beloved among many in the investing community. Among many. I wasn't a fan, but It was beloved. People saying, what a great company. And then pop goes a weasel. Someone actually did mention what happened, but I did not include that comment in this particular video. But the chart looks horrendous now. Share price dived on their results, and it's kept on diving. Massive volume. So daily chart looks horrendous. But if you look at the weekly chart, wowzers, look at that. Now, they definitely did a share consolidation, 2017. So they definitely did a share consolidation. And to back that up, what I'm going to do is retail food group, share consolidation. I'm just seeing when they did it. October 2024. There you go. I thought 1 for 40 share consolidation in December 2040. So what you do now is divide 300 by 40 and you get below $10. And that sounds right. Yeah, that sounds right. So the share price was not $300. This is taking into effect the share consolidation, which means if you divide 160 by 40, you get 4 cents. So the share price has gone from around $10 to 4 cents. Yes, I'm going to say that again. Share price has gone from $10 to 4 cents. Just imagine if you've held shares in retail food group during that whole period. The value of your shares probably is minuscule. It's probably worth nothing. Virtually nothing. Scott says, Computershare might be worth a spot on the radar. Probably as soon as I saw this comment, I'd say the main concern would be Computershare is sort of a proxy for interest rates. So when interest rates are going up, Computershare is a pretty good purchase because they have a lot of cash holdings or whatever you want it, and they do get a lot of money back because cash, I don't know what you call it, but they do have a lot of cash, and they get a lot of benefits from having that cash. But when interest rates are dropping, the reverse probably is true. So if we have a look at maybe, have they released results yet? In fact, I'm going to ask ChatGPT because I don't think I'm saying it as good as I should be saying it. Computershare, why does this company benefit from rising interest rates? Okay. Benefits from rising interest rates because of how it handles client cash balances, client funds held in trust, leverage to interest rate cycles. When rates are low or zero, Computershare earns almost nothing on these balances. When rates rise, you know this, even a small percentage increase generates substantial extra revenue. Okay, so that is exactly what I was thinking. Computershare benefits from rising rates because it holds billions in client balances. Yeah. So when you see rising interest rates, and one of the thesis behind this company a few years ago during the rising interest rate cycle was, this company is really going to benefit. And you'll see the share price rising significantly during that period. You can see 2021, 2022. What a rise. Now, you would suppose the opposite should be true. And the share price should be dropping right now, but it's not. It's not dropping at all. In fact, the weekly chart doesn't look half bad. It's struggling to get above $42, so there is a bit of resistance there. So that would be my one thing about Computershare. Other than that, I don't know much about the company, except their platform is horrible. So I do have a Computershare account, and I just don't like their platform. Maybe that's just me. Jack says, can you do a chart on a Veem? It had a big fall. Do you think it will bounce back and continue an uptrend, or will it fall further? If I saw a company share price have a big fall on results, I think the share price will struggle, if anything. So let's have a look at Veem chart, daily chart. It looked promising, didn't it? It looked really promising. Now, in saying that, I'm going to come back because the share price popped up and has pulled back. So the question becomes, in this pullback, is this just like is this a part of the uptrend cycle? So when a company share price is in an uptrend, you'll see a pullback all the time. And this does look like the potential that this could be the start of an uptrend, and this could be like the first pullback. And we didn't see massive volume coming through, but share price pulling back 12% in one day is a little bit of a concern. Now, share price was flat on Friday, and the share price is at a nice little support level. So you could actually say and argue that $1.05 is a low risk trade because it is at a support level. Now, it's not a strong support level, and there could be some bit of upside if this is support. And if it breaks through that, you just sell for a small loss. So I can't say if I can't definitively answer whether it will bounce back and continue an uptrend or will it fall further. That's an impossibility because that's the future. But I think it's all about risk reward. And I think $1.05 for Veem could be a nice little low risk play, particularly if you pay or be a little more active. And if the share price drops to below $1, you could just get out for a small loss. But particularly if the share price sort of stabilizes here just above $1.05, and then you might see the share price starting to rally again. Thank you for that, Jack. Oh, okay. My tip is from VBED. My tip is that IPH Group will bounce back tomorrow. And, the reason I included this is not black top images. I agree. It was dumped on open, reached the low around 10:45 a.m., then steady buying all day. I have a feeling this is manipulation for a liquidity grab. Just acronym. Is that a trend killer event? I'm waiting for it to hit a 52-week low. And VBED says, own IPH and I'm spewing. Is that because you're sick? Do you have like a flu? A virus? I don't know. I got sucked in by parade financial gurus over the last 6 months stating IPH is a buy. I'm so happy I don't follow anyone. If I had unlimited money, I would buy up every quality stock that drops sharply during the August reporting season. Most of them bounce back up the following day. That is actually a really interesting story. Or interesting comment, because I have done that when it comes to high quality American companies. When I see the share price pull back on results, I will buy because I think that usually is no reaction from the market. So I actually find that this sort of comment, there's a lot of validity to it. I did that with Meta. Share price pulled back 10% on quarter results. I went, yes, buying some Meta shares, and share price has gone significantly higher since then. So I do think there's a fair bit of validity having this strategy. Now, the question becomes, is IPH high quality? I would say no. That's just me. And it's just a lack of revenue growth. Actually, revenue per share growth. The other one I wanted to say look at is just acronym. Is this a trend killer event? Let's have a look if this is a trend killer event. Oh, yeah. So share price was moving in an uptrend. It looked like a beautiful uptrend. Then all of a sudden, down she goes. So what I'm going to, how I'm going to answer this is simple. I'm going to put this into my trend killer watch list. It does look like a trend killer event. Now, the question becomes is there might be some value. I don't think this company would be overly expensive. In fact, yeah, dividend yields 9%. And I don't think the dividend, like the company's not, what's the opposite of growing? It's not, the financials aren't dropping. It's just that the revenue is growing, but they're growing because they make acquisitions, and these acquisitions aren't earnings per share accretive. In fact, very small increases in earnings. And I do think there is potential that there is value in this company right now. Potential, I'll say potential. And when there's potential like this, I think there is potential that this company is cheap. And I actually have thought that for a while now, but yeah, this could be a trend killer event, but value. So I'm going to follow this one really closely because it looks like a really bad reaction from the market, but it could be an overreaction. Maybe. I don't know. Interesting one. Dev Shaw says, are you going to talk about Sonic Healthcare? I should also mention, thanks for the video, he said. Well, you're welcome. Anyway, are you going to talk about Sonic Healthcare? I would have, but unfortunately, even though it dropped 13%, it was not as bad or as good in percentage terms as the other 5 companies I mentioned in more depth in that on that day. They had full results announced today. Revenue is up, though interest net interest expense will go up 15 to 20% in 2026. PM Minerals is another one which went up 39% today with no announcement. Most likely effect of Next Investors email this morning, not sure. Okay, I won't mention PM Minerals. If Next Investors did or release an email, which I probably missed because I was a little bit busy, that's why the share price went up 39%. We'll have a quick look at the chart for this one. Yeah, the chart doesn't look half bad. But again, if the share price goes up that amount just because of Next Investors, I usually don't have any interest. Now, on to Sonic Healthcare. Sonic Healthcare share price went down 12.8%. So this would have been in the top 5, except it didn't go down enough. Okay, I don't remember looking at this one in depth. We'll have a look at the media release. Sometimes I'll be really lazy, just have a look at the media release. So revenue growth 8%, EBITDA growth 8%, net profit 7%, cash generated from operations 21% growth, earnings per share up 6%. So in isolation, looks okay. Looks okay. Now my question would be, I'm just going to have a look at Morgan's calendar. SHL. It is in this. Let's have a look. Okay, so we can actually compare these results to expectations. Now, I'm assuming Morgan's is right when it comes to consensus, because I've actually looked at other sources, and the other sources and Morgan's, when it comes to consensus, are not exactly the same. So maybe they look at different group of brokers. I have no idea. Anyway, I thought a consensus would be everyone, but maybe it's not. Anyway, so they have, let's have a look at financial year 25 forecast. Revenue of 9.6 billion. It came in line. EBITDA 1.75. EBITDA was below expectations. A very slight miss. Profit of 514. Expectations were 544. So straight away, I can see why the share price would drop. So EBITDA and net profit came in below expectations. Now, typically, there's no expectations when it comes to operating cash flow. So for some reason they put it in, probably because it's a nice growth, 21%, and earnings per share 106.7, and expectations were 113.2. So definitely we can understand why the share price dropped, because these results were a little bit behind expectations. Now, also, did they do any sort of outlook? Okay, financial year 26 earnings guidance equates to earnings per share growth of up to 19%. That actually sounds pretty good. Okay, so let's go back. Now, they also, okay, it sounds good, but consensus earnings per share growth for financial year 26 was 21.3%. So 21.3%, and they've mentioned here 19%. So even that's below expectations. I thought that was going to be really good, but no. Anyway, so that is why the share price of Sonic Healthcare did drop. Yeah, and I didn't really even mention net interest expense. So all I'm doing, looking at how the results met expectations or didn't meet expectations. So let's have a look at a chart for Sonic Healthcare. Have a feeling this chart had popped up on my radar recently. Yeah, it was popping up on my radar. Share price looked like it might be moving uptrend, and then bam, down she goes. Maybe this is like what's the other company? Maybe this is like IPH, where there could be some value here now. Maybe. We'll say maybe. Medical Investor says, time to get a home battery and solar with your new house, Kneppy. Had a blackout today at our place and was the only house in the street with power so good. And then Sensei says, Kneppy, get a Tesla power-free home battery installed in your new house. It's a must for you, as you need electricity at all times. As an investor, long-term trader, and YouTuber, you just treat the $30,000, $15,000 cost as though it's a compulsory part of your house build total cost. So this is something I probably will do in the long term. Maybe not just yet, but definitely in the long term, this is something I'm going to do. This is something I'll do. Definitely. I think this is an absolute must if you're building now. And if you have a house, having a home battery and so, yeah, I think it's a must. So, yeah, so this is definitely something I'm thinking about. Actually, I've already thought about it. I'm going to do it. Okay, Motivational Flavio says Objective Corporation is a high quality company. I own as well, but 20% up in a day with these results is too much. And hey, it's selling off today where people are obviously taking profits. Okay, so first thing I'll just mention here is I'm pretty sure there was another comment about. Oh, no. There's a comment about extreme reactions from the market, which I'll mention in a second. So this is another case where I think the market has just gone a little bit silly, 20% up in a day. And the good thing is for me is because I consider this company high quality. I don't think it's overvalued. For me, this is just a long-term hold. And I don't care about these one-day gyrations. I don't care the share price went up 20%. It feels good. And then the share price dropped the next day by, 5.68%. And this, for me, it doesn't matter. For me, this is a long-term hold. And there's no reason for me to get out of Objective Corporation. It's a quality company. Why is it quality? Let's have a look at its financials. Now, I've always thought about this company. Well, maybe not always. I've definitely thought about Objective Corporation as a high-quality company for probably 7 or 8 years. Now, let's just have a look at their overview. This is as simple as it gets when I consider where a company fits on the quality spectrum. Revenue growth, 5 years, 12%, satisfies that. Now, the last 3 years and 10 years, maybe not, but I do think that will grow. Earnings per share growth, 25.8%, thumbs up. Gross margins, operating margins, 2 thumbs up. We're talking about 33% for operating margins. Now, I prefer to look at the 5-year history, but maybe I can do a sound video on Objective. Oh, so we're doing sound video on CSL, Fiducian, and now Objective plus romantic comedies. Not romantic comedies, just romance movies. Anyway, nice margins. Return equity, return versus capital, 5-year average, 36.24%. This satisfies my high quality screener without doubt. The only thing would be revenue growth, but everything else is fine. So this is a high quality company, and the chart looks great. Got to an all-time high recently. So when the last time share price was this high back in 2021, the P ratio was 100. Now it's like 50. So just taking time. It's taking time. And there's me buying. Not at the low, but near the low. Ooh, anyway, so that's Objective Corporation. Sensei says, thoughts on West African resources, future potential trends, and analysis of last 2 years chart. Okay, I am a shareholder of West African resources. I've held this one for a while. In fact, I should actually put where I bought, because I haven't put it on here yet. I bought West African resources. Actually, I can tell you when I bought, almost exactly. Because I bought just after they went into production. And so it would have been somewhere in 2020, I think. It was just after they went into production. And I just had a look at their Appendix 5B, had a look at their profile, had a look at potential for growth in the future. And I went, ooh, this company looks pretty cheap. And one of the reasons they looked pretty cheap at that point was because of the sovereign risk, because this company has operations in Burkina Faso. And we saw the share price of this company drop a few years ago because there was a coup d'etat in Burkina Faso, but it didn't affect this company at all. Share price pulled back, people overreacted, that sort of thing. And I do think a lot of times, companies like this, you will see not only a discount to the valuation, but people do overreact. Now, in saying that, on occasion, you will see some problems, some political problems when it comes to these companies. But at this point in time, we aren't seeing that with West African resources. And they are or have a new mine coming into production. I think it might be already in production or just in production. If you have a look at the gold production, hopefully this is, well, they did a presentation on the 6th, which I haven't looked at. Typically, if a company I own for the long term releases a presentation, I always have a look at it. But you can just see the last time I looked at West African, it probably was a month ago. Okay. Where I'm just hoping they do have a nice little. Oh, here we go. Kiaka construction completed ahead of schedule, under budget. Open pit mining operation stable and meeting budget. Ramp up of process plant progressing to plan. Production to average 248,000 ounces gold per annum from 2026. So right now, so this is their aim to get to 569,000 in the last quarter. Let's have a look at their activities report. Was it just over 300,000 if I remember correctly? I could be completely wrong here. Gold production. I was only 45. What there? Oh no, I'm thinking yearly. I'm thinking yearly, not quarterly. So yearly, so quarter 45,000. So divide that by 100. I was way off. Anyway, so they are going to significantly ramp up their production. So this is in a quarter, and they're aiming for 500 per annum average. So we're talking about significantly increasing their gold production over the next few years. And I just think there's value in this company. Oh, here we are. This is what I was looking at. This is what I wanted. So this is the gold. Oh, no, this is mineral resources. I was just looking for a gold production chart. Reserves, nah. No, that's the target. I don't care about the target. I'm looking for historical also. But anyway, 300,000. For some reason, I was thinking 300,000 in 2025 and doubling. So getting close to doubling that by 2029. So they're significantly going to ramp up their gold production over the next few years. And I just think this company is cheap. And when I say that, if you have a look at, oh no, that's the wrong company, NVIDIA. Definitely not NVIDIA's level. It's a very low price to earning, and 13.4, that's based off the current production, and that's just going to significantly increase. So I do think there's value in this company right now. Onto the chart. So this is a weekly chart, and I think you're seeing that. Well, you've got gold prices increasing, and you're seeing that in the chart over the long term as well. Funny enough, if you look at the 200-week moving average, this is the chart of a high-quality carbonate, even though I would not call West African high quality. And the time to buy this was back in October 2023 when the share price dropped below the 200-week moving average. That's funny. So I never claim this as a high-quality company just because it's mining, but this is a chart of a high-quality company. Anyway, so that's West African Resources. Now, you said the chart over the last 2 years. So let's go back to, well, the chart over the last 2 years has been fantastic because here it is. In fact, we'll go to the daily chart. Share price reached a floor in October 2023 at 68 cents. Now it's 280. So a brilliant chart in the last 2 years. No complaints. And the share price is getting towards, I'm not sure why the share price dipped at the start of June, but the share price is getting back up to its all-time highs. No problem with that. Anyway. And Trader Hooper says, have the reactions to market reports been more extreme this month? I don't remember so many moves of 20% or more in the past. Just Acronym says market swing during half-year reports in February were equally violent. I wasn't paying enough attention back then, says Trader Hooper. I'm just wondering, because I had the same thought the other day. It was just like, golly, because my cutoff for companies getting in the top 5 was 10% rise or drop in share price. And the last 2 days, the cutoff has been above 15%. In fact, I think yesterday was above 17% or something like that, which is strange. And we are seeing really extreme reactions. And some of these reactions don't make sense. Like a company just beat expectations or just missed short of expectations. And I just don't understand why the market's reacting like this. So, but in saying all that, I could be suffering from recency bias. Well, these look really extreme, but if I go back and try to dig into my memory a few years ago, I'm pretty sure we had these sort of really extreme movements as well. But if I go back 10 years ago, I can't tell you. I can't remember back then. No, I don't remember. I'm sure there would have been extreme movements, but maybe not this amount. I think maybe the market is reacting at the smallest thing And is that a symptom of an overvalued market? I don't know. A lot of questions I do have about what's happening. And in the past, I used to jump. When I see the market react like 20%, I would jump and go, oh, this is a good buy. I'm not doing it now. I'm seeing some of these companies jump up 20%. I'm going, no, I'm not going to react to this at all. I'm more inclined to see the share price drop 20 or 30% and think the markets are reacting and this could be a buy, which has not been something I've done in the past. Okay, so just acronym. Is this just Jim Cramer? Has just Jim Cramer changed their name to just acronym? Ugh. Anyway, out of all the companies in Saturday's video, please pick. The reason I thought that is because this is a question he's asked the last few weeks. Out of all the companies in Saturday's video, please pick one stock worth investing on Monday, excluding Pro Medicus. Have I mentioned Pro Medicus? Have I mentioned Pro Medicus? I haven't mentioned Guzmani Gomez. I don't think I've mentioned Pro Medicus, although I've just mentioned it. So anyway, let's have a look. I would always struggle to recommend a mining company. Objective Corporation, high quality, maybe just valuation, but high quality. And I'll always say, try to find a high quality company to invest in for the long term. So is that the criteria here? Please pick one stock worth investing. What is your definition of investing? Is that different than trading? So if I go with the sort of the common definition of investing, talking about long-term, high quality long-term, Objective Corporation would be near the top of that list. Who else? Who else did I mention? Why did I not talk about this? Okay, I completely went past Rick Thelian's comment. Sonic Healthcare, no. IPH, no. Veem, no. Computershare, no. RFG, no. OVT, no. Step One, no. Superloop, no. McMahon, Smart Parking, no. Cecil, no. Objective Corporation, I probably prefer. RPM Global, I might prefer Objective. I don't know. Fiducian. Ooh, I like Fiducian. I'm a little bit biased when it comes to Fiducian, however. I'm going to go Fiducian here. The main reason is I'm a little bit biased. I've held it for a long time. In fact, it's one of my longest holds right now. And it's my favorite of mine because it was small cap. It's still small cap. And every single year when I look at the results, I have nothing to complain about. I'll do a selling video on Fiducian. It's going to be Fiducian. And thank you for that just acronym. And I'm really glad I went through this because I missed one comment from Rick Thelian. IAG ex-dividend 19 cents, but lost 35 cents for the day. You sometimes see this, by the way, when the share price of a company drops by significantly more than the dividend. I think there's a few things happening here without me knowing much. It could be franking credits have that role as well. And also a lot of income investors might have hopped in, and because they hop out, they go to the next income paying company. And because they all hop out, the enthusiasm is way more extreme than anything else. And they don't care if actually they lose money. In fact, that's what they're doing. If you're selling at a greater amount than the dividend plus the franking credits, you're actually losing money. You're not gaining money. You're actually losing money. And they're willing to do that because they just want a little bit of dividend, a little bit of income. So I'm wondering if that is the reason why this can happen. So IAG dropped. What day was that? They went ex-dividend on the ex-dividend on the 21st. So that was on the Thursday. The dividend was, what was that, 20 cents, 18 cents? What did you say, 18 cents? 19 cents? And on that day, the share price dropped 35 cents. Yep, and it's dropped the next day. I'm wondering if that's happening. I've seen this now a few times when the share price drops by way more than what you would expect. And I don't even think franking credits can take... Anyway, so that's what I'm thinking. It's just income players just getting out. They don't care. They just don't care how much they sell for. Dividend yield even the dividend yield sucks. 3.6%. I wouldn't be chasing these sort of companies with that sort of dividend yield. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this That's it for this video, not movie, although it's almost at a movie length. If you have any questions, any thoughts, I think that's it. Anyway, have a good day. Bye.